morning, everyone. It's Chris from Solstice ATR, as well as Axel. You can find us on both websites, X, YouTube, and I'll go over the disclosure. We're not a broker-dealer. Our past performance doesn't give us any indication of our future results. What I want everyone to do here is to learn how to trade correctly with no bias. I know the volatility has been for the last 3 weeks from Iran situation from February 28th. The dump, the crude oil, the bond sector, the dollar, as well as, the currencies, as well between equities, tech sector and non-tech sector. Remember, we're here to help you, give you the correct education, and you can check us out on the website. This is for retail, for the algorithm. This is for institution as well as an accredited investor. If people want to look at us, you can find us at Axel. You can find us on X right here. And I'll give you an example. On Friday, and I had cold may grind higher. Here is Apple. Good morning. The overnight inventory is green. Iran/USA oil CL was down, getting through the Hormuz area. Eyes on S&P 500 at the 7,112.5. The Nasdaq, the Russell, Bitcoin, XLK, which is the technology, the semiconductor, SMH, the new composite, XLF, the financial and consumer product, versus the dollar, the VIX, the bond market, as well as the short-term maturity. And I said to everyone, take some profits in Tesla, Amazon, Google, and NVDA, while Apple's going to grind higher. And I posted it in there. Here's the timestamp on it. I'm going to show you it. So it says 6:24 a.m. This is Californian time. And the second timestamp on Apple was, let's take a look at it. That was at 6:40 a.m. And I said, pay attention to it. It started to grind higher, broke out of overnight high, which was the 268.60. There was, if you drew a linear regression downtrend channel and you broke that F6, which is the 61.8, 50, and 38% off to the races, and I showed that right there in the morning. And the second one I posted right there, and I said, Apple, are we there yet? What time was it? It was at 8:23 a.m. in the morning. So I hope this is something that you guys will pay attention to. I'm on X. I usually give one tweet in the morning. It's for free for everyone, as well as the YouTube channel. The weekly video is for free. You can see it right here. I don't want to check it, but basically everyone can take a look at it. It's right there. Last but not least, on the Forex Factory, every day you have reports on the overall global and domestic. What are they reporting about? Interest rate, PMI, employment, crude, bond market, and so on. We have a little bit small on Tuesday. We have the core retail sales, as well as the Federal Reserve Board chairman is speaking right there. And on Wednesday, we don't have so much other than the crude oil. We have to pay attention to what's going on. And on Thursday, you have a little bit of unemployment claims, flash manufacturing PMI on that day, and on Friday it seems to be cool as well. So the most important is the earning report and what we can do on daily basis to find setups, whether we're going to swing trade or day trade. I know it's been a little bit difficult for a lot of people. Let's go to the first Thinkorswim through Schwab. Let's take a look at the first chart. And what I did, I put VU instead of SPY. That's the Fortune 500 9-month on the electronically traded fund. We can see the February high was 641.15. We came down to the March low that was on the 30th, and that was the low 578.48 cents, and we rallied up. That was the prior consolidation. You can see that double top. We rallied, we looked above when we failed, and we came back, broke on a gap here. We have this large gap in here. Gaps do not need to fill. Sometimes they fill. You can see here we had the gap down, rally back up. Then you have a gap down, then a rally back up. So usually gaps are fillable. It does not have to come back and fill, but I am looking because the RSI is getting overextended extended, and the directional momentum indicator is above 40. The momentum indicator, directional momentum, the plus one is in green, the red one is in red. Usually whenever they cross, there's a change in trend, and the advanced decline line, which is the average between the DMI plus and the negative directional momentum, it'll pick up the move in the direction of the move to the downside if the momentum is down, or it'll pick up the direction momentum of the DMI, the ADX, advanced decline line, in the direction of the move to the positive side. Whenever they are lingering below 1015, that's chop face. Anytime the DMI, whether it's positive or negative, picks up the direction of the move with the ADX to the upside and clears 15, you look for 40, 45, 15. Eventually when it gets to 60, it's overextended and overdone. On the daily, you can see it is a little bit extended. Let's just zoom in here, and what I wanted to show is that consolidation here before the breakout. This area is very important. We're going to show it here in a box. Okay, I'm going to mark it in a little box from this area. So we're going to grab this box, do a crossing here. This was a lot of congestion here. We couldn't get the supply. This was considered supply. We tested it here. We fell down, and here we broke up sharply. From this area here to this area, we have that large gap in here. If I do zoom in here now, we're going to look at this gap here to here. You can see it. We can mark it and go to cross on it. We can edit the property, and we can put, instead of here 4, you can see 20. I'm going to put 30 on it so everyone can see it. So this will extend the bar all the way down, and this one is here. But if I'm pushing, there's another one between here and here. Even coming back, edit the property, I'm going to put 30 as well here so everyone can see it, in case the volatility picks up. So we want to make sure that these gaps, sometimes they do fill, they don't have to fill. You can see there's one more here from the Friday move. Let's just zoom in here. This was Friday, Thursday, Wednesday, Tuesday, and Monday. If I take the measurement from the Sunday through Friday, this is the measuring tool for the expected move on VU. I can take the high to the low. These are my extensions from 100 to minus 100, from 100 to plus 200 extension to the upside. The market can do whatever it wants without being biased. So what I'm going to do, edit the property. I'm going to take it back to the first of the year. You can see where it says April. I'm going to go 1. I'm going to go 0, 1. Okay, everyone. And I'm going to change the color. You can see the extension from 0 to 100. That's what Toss or Schwab does on Thinkorswim. It's no longer Toss, it's Schwab, but Thinkorswim is, because they got bought out, they only have 0 to 100 on the measured move. What I did, I extended it to minus 100, and I extended it to plus 200, and I'm going to change the weekly measured move to cyan or blue, baby blue, extend it to the right. So when I zoom down, I know where my levels are for March. I mean, I can go back, to the prior month. This was a large consolidation between October, November, and December. You can see those rallies where we had triple tops. We couldn't make it. That was a January low. That was the January, where is it? This was the January low, I believe, and that's the high here. We were zigzagging in that consolidation. You can see it here, and we rallied up. Coming back on the weekly bars is not bad, but where I'm looking for is that supply area, which becomes the demand for the following week. So I can edit the property. I'm going to make it 30 so everything looks the same on those gap fills. So this is on the S&P. I'm going to sound like a repeated, broken microphone. It repeats itself. So this is on VU. So what I'm going to do, take a look at the NASDAQ NDX, which is the large contract on the NASDAQ 100. You can see in the NASDAQ 100 that double top from the prior year on 10/29. And this was on January 28. We double top, we fell down and rallied back up. So if I want to take the March high to the March low, when I do the extensions for the Fibonacci's, I'm going to show you how to do this on the monthly. So this is my low for the month. Where's my March 1st? March. This was the high, I believe. Yep. This was the high. You can see my extension is minus 61 or plus 161. If I draw from top to bottom, it's be inverted, but I do, this is 123, 138, 150, and 161. Can we get more extensions to the upside, which will duplicate the 178% than the 200? Yes, but we are sitting right on the VU, and you can do the weekly measured move. This is the Friday, Thursday, Wednesday, Tuesday, and this is the Monday. You can see the gaps. If I zoom in here, which at the one on the bottom, we can see where those gaps are. There's one here, and there's another one, small one between here and here. Can I mark him? Yes, I can mark him, and what I'll do is just a small oval to show you where they are. This is one, this is two, and the bottom, the large one, is up here. Can we consolidate to come back further down? Yes. Does the market have to continue? We are a little bit extended. The RSI once again is above 75 to 80, 85. Usually my marker is around the 78% to 85%. 78% is a 38, like the 38.2. You can see that's a 78, and the 38 are identical. We're getting too high on the RSI. The midpoint is 50, and the bottom is 23 to 15. So I want everyone to pay attention to these levels when we get too far extended, and the directional momentum indicator shows it's at 51.5. Can this continue? Yes, but we're going to see what the Middle East does, what oil does, and if there's going to be still negotiation or not. We're going to trade what the charts offer us, not what we think. Let's take a look at the SPX here. I'm doing them one by one because I want everyone to pay attention to what I am showing them, because this is a way to take a look at it. I'm not going to mark this one. I just showed the prior year high right here. You can see the 100% and the 78%. We came down on March. We had this gap. We got another one here and a tiny one here. So pay attention in case we come back to this consolidation here on SPY. I will show you SPY. I did the work on it so everyone can see it. This is the SPY. You can see that there's the consolidate. This was the breakout. That was the supply area or the demand area. We're going to mark it from here. Let's do this. Mark it from here to the top up here, and I'm going to extend it to the right. So people even coming back 50% of that move will be very efficient. You can see that this gap here, and there's another tiny one here and a large one in here. Coming back at least from these 2 weeks, most people will measure this gap from here to here because this was the 2-week range. I'll measure only the 5 days myself, which is Friday, Thursday, Wednesday, Tuesday, and Monday. I will never measure it from here, which is the 61.8. You can see the breakout here. Coming back to the support area in the prior year would be a great area of consolidation before continuation if things are going to happen, and if you fill a partial gap here or the one down here. So pay attention to what the charts offer you. Let's take a look at the SMH. That's the semiconductor. You can see it pushed as well high, and we did mark it here from, that was the prior highs, and you can draw an uptrend channel, which we broke above it, coming back to it. Most people will look at it that way, and we are in an uptrend, very sharp incline wedge. So this wedge is from here. If I mark it this way, this is the uptrend, and if I mark this one or this one, you can see that this trend up here on that wedge, we are in that linear regression. But if I draw one from this one here to this one, you can see where the breakout happened on the charts. And if I do it from further way back, you can take this one here to here, and people will say, oh, this is, right on that level. So I use wedges just for supply and demand and resistance in case we do look above and fail on them. And I use wedges because the RSI is overextended. You came out of compression right here, and since we came out of compression on the daily chart, this is 9-dot rule. Usually the Bollinger and the Catlett channel expands too fast, too quick. Usually you get a relief back to the midpoint. Does not have to, but I'm letting you know. That's on the semiconductor. Let's take a look at the XLK. You can see the XLK, that was the top. This was the December. This was the January high, we fell down and rallied up. You can see on the semi, I measured the move from the prior a month and a half ago. So we're going to activate it. So we can see that we did this activation a little differently. We're going to look at the March high. Where is it? Let's take a look. That's March. This is the March. This is February. This is the March high. And you can see my extension is 161. If I edit the property, you can see where my properties are on that 161. So what I'm going to do, take the minus 161. I'm going to put the 1.786 in there, and I'm going to make the coloring like it's supposed to be. And I usually leave these for the monthly the way they're supposed to, and the anchoring is number 1. And I will take the 161 away and I'll make it 2. I'll make it white so everyone can see it. I did not put the other ones on the charts for the 150 either. So I will show you the 150 as well. I'm going to take the 241 from here, the 423 from here, and I'm going to show you the 1.50, and I'm going to make it thick, and it's going to be number 2, and it's going to be in yellow. So that way, the setup, you guys can learn from me a little bit. You can see where the possibility of coming back on XLK. So I showed you the monthly expected measured move. We are almost at 200%. We are overshot. You can see the RSI. You can see the DMI as well on that platform. What I'm going to do is here just talk about the earning of TSM. I'm doing a little bit of different mixtures. You can see here in the TSM after the earning report, it kind of did that top, the high. It didn't create a right shoulder, and we fell down. We rallied up. We have that large gap. The report came in clean, but they sold it off due to what? Because they need what? Data centers, you need supply, NVDA, AMD, Dell, Microsoft, and so on, correct? Part of the hardware on the computers and the data. So this is why they sold off, because they think their revenue is good, but they have a supply issue. And I wanted to show TSM, and I want to show as well ASML. And you can see here on that earning, it did the same thing. This is considered for me like a triple top or head, shoulder, head, shoulder, and they sold it off, coming back up due to what's going on. I can show you Dell as well. I'll do Dell and AMD. You can see Dell new highs, AMD new highs, but you got to remember, you're going to trade what the charts offer you, and the RSI is a little bit overextended. The Fibonacci from the low to the high, you can see they took the March level to the high in April. I would take only the March level or the April level for doing the measured move. This is why I am looking at it. I'm going to show you See, I did here a wedge here. This was in the overnight. You can see it. Then it fell down. Then it did the consolidate, broke up, double top, fell back in. And now we are in that sharp upward. The reset coming back to where the breakouts are and where was supply is very important in AMD. That will give you an opportunity to do those trades. So this is one way to look at it, and I wanted to do this on purpose just to give you an overall view. And I'm going to show you RKLB, Rocket Lab. Everybody want to participate in SpaceX. You need the components that are on that rocket in order to participate, because if you're not part of the institution or accredited investor and you want to have an interest in it, you're going to go into the market on that IPO, jumping in automatically. So you can do different ways of looking at it and understand the risk and where you want to participate in, or you can participate in different instruments. And I'll show you UFO as well. And you can see UFO new highs on that instrument, because remember, they create rockets, they create different material, wiring, and so on. I just want to give you some ideas what you can look at, and what I want to do is show you move and the interest rate bearing account, and you can see that the bond sector sold off sharply, or you can see it in the ZF underscore, or we can do just /ZF. so we can get the right contract. And you can see that the bond market after the panic in February, then they brought it back down and now they started to rally. So risk is back on. So we have to pay attention to IEF or IEI in the bond sector. And I will show you the VIX, the VIX. Every time, VIX, I was going to put the VX. You can see the VIX every time it got up in the $30 here. We were panicking in February and in March. You can see the spikes and the dump, and we got this gap. We're coming back to that $17, $18. Usually the VX is in the $20. I have a lot of markings on it because I trade the VX more than the VIX. And you can see that this is a level where you usually get a spike and a reverse, spike and a reverse. So we are in that consolidation because the fear has gone away. We have to just see if this is just behind our back, or is it going to rally a little bit to come back in, or does it continue back to the bottom where you you hedge your positions on the long term. Let's take a look at now the micro ES. I'm going to use the micro ES. And I'm going to show you the micro ES, that breakout in that downtrend channel. We had this wedge. We broke up and continued. We created a new high. This was the supply. So we can push it halfway back, which I'm going to activate it. Watch this. I'm going to do activate. I'm going to bring this a little bit higher so everyone can see it. And what I want to do is take the upper portion of that range on the E-mini micro ES. Remove the drawing so you can see where that area is, and you can push it up to that high. So coming back in the next 5 to 10 days, you can see that move up. We continued on a grind up, and the Friday was a push up coming back in, but the RSI is overdone and the DMI. I'm not biased. I just have to pay attention to what the technicals are telling me without getting caught on the wrong side in the DMI. Can the DMI touch 40 and reject and come back into that area? Possible. So the most important thing, you understand the risk in relationship to your entries and exits in your position, because the average true range, you can see it's 103 points. So if you split it in two, that's 50 points on the range on an S&P. So if I go to a shorter time frame, and what I do, I can use a 2-hour 10-day. What we can do is take a look at the high and low. This is the overnight low in the morning. You can see where the low was, and this is the high. If we do measurements on it, I just want to show you how to look at it. If I take the high to this low here, where is my 50%? If I take 71.30 to the 71.85, you can see that the moves are usually 50, and the RSI into the close, because it got overextended on the hourly, sold off and came back to the 78.2 fibs. So I trade what the charts offer me without being biased. And I wanted to show this to everyone. So you calculate the average true range. It doesn't matter what instrument or the micro NQ. And you can see this is on the weekly chart, the micro NASDAQ 100. I do have these Fibonacci's from the prior week. So what we're going to do is go in 15 days out or 20 days out on the 4-hour. You can see my anchoring is from the prior week. So we're going to activate this. I'm going to show you how to do this. You're going to grab that top here, that box, put it on the high that we created, and we're going to use the last week's range, which was on Sunday. This is last week's fib for Sunday. So my high and low, even coming back to the 61.8 of to the 50%. This is where most supply is. We're going to go back to the daily, and I'm going to show it. So we're going to go to a time frame daily. We're going to use, instead of a year, 9 month. And I wanted to show this so everyone can see where that 50% coming back to that. This was the supply area, because we looked double top. When we fell down, we couldn't take this double top here. We came back down and we rallied sharply high. So now it's no longer this one. So if I activate this and move it to, instead of doing this, what I'm going to do is go get an oval and show you that level on the charts where that where we can come back to in case of consolidation coming back to that area. Does it find support and continue, or do we continue up with the, runaway freight train with no brakes? So you got to understand the risk involved, where your levels are. You can see that linear regression. When we broke out, we continued. We broke the second linear after the races, and we cleared those double top, and we pushed higher on Friday. So trade the charts, what it offers you. If you have any questions, I want to keep this video short and brief. I know that I covered a little bit, but we can take a look at the different equities during the week on X, and I'll post them on for you on a chart and giving you different sectors to look at. I hope this video was very helpful. If you have any questions, once again, check us out at solstice.axel.com. Give us your commentary. Let us know what we can do to help you, or on Axel. Over and out.